Hello and welcome to traders and investors. I'm glad to present you the daily market review prepared by analysts and experts from fx.co portal. Here we go. Today is October 2 and we're starting from Euro-Dollar pair with Jakub Nowak. But first, let's have a look on 5-minute chart for analyzing yesterday's transactions. The test of 1.0595 coinciding with the decline of the MACD line from zero, prompted a sell signal that led to a price decrease of around 20 bips. Better than expected inflation data for the Eurozone helped Euro on Friday morning, but the report on US price pressure reduced risk appetite, leading to sell-offs. Today, much will depend on the business activity index in the manufacturing sector, where poor figures and further reduction in activity will result in another decrease in the pair. The unemployment rate in August may remain unchanged, but if the data exceeds expectations, Euro will regain some positions, increasing the chances of an upward correction. For long positions, buy Euro when the quote hits 1.0595 and take profit at the price of 1.0643. Growth may occur as a part of an upward correction following use of manufacturing activity growth in the Eurozone. However, poor data could dampen all buying enthusiasm. Note that when buying, the MACD line should be above zero or rising from it. Euro can also be bought after two consecutive price tests of 1.0560. But the MACD line should be in the oversold area, as only by that will the market reverse to 1.0595 and 1.0643. For short positions, sell Euro when the quote hits 1.0560 and take profit at the price of 1.0520. Pressure may return at any moment, especially in case of weak Eurozone data. Note that when selling, the MACD line should be below zero or dropping down from it. Euro can also be sold after two consecutive price tests of 1.0595, but the MACD line should be in an overbought area this time, as only by that will the market reverse to 1.0560 and 1.0520. The next stage of our review is the next major, GBPUSD, presented by Petr Jakimovic. GBPUSD has been trading downside as we expected, and Petr sees potential for the further drop towards next downside reference. Due to the strong downside cycle and negative reversal on RSI, Petr sees potential for the further drop towards lower reference. Downside objective is set at the price of 1.2110. RSI oscillator is showing fresh hidden bearish divergence, which is good sign for the further downside movement. Key resistance is set at the price of 1.2265. And finally, here's Laurie Bailey with AUDUSD pair forecast. Let's have a look. On Friday, the Australian dollar failed to break above the MACD line, and so far the price has been supported from the below by the balance indicator line, its red line on graphic. The Marlin oscillator is in a bullish territory. The advantage is with the uptrend, and the price may try to overcome the resistance at 0.6514 once again. If it succeeds, the price could further rise towards 0.6612. On the 4-hour chart, the price is above the both indicator lines, and the Marlin oscillator is in a bullish territory. It's an uptrend. But the price may retreat to the MACD line, 0.6408. And the Marlin oscillator may touch the zero line before both the price and the oscillator synchronously turn upwards. In general, Australian dollar is trading in the range of 0.6388 and 0.6514. What about crude oil commodity asset? We've got a bearish trading plan by area of Mockmore. With the appearance of deviation between the price movement with our RSI indicator, then, in a few days ahead, this commodity asset has the potential to weaken up to the level of 88.19 as the main target and level 79.34 as the second target. But all of these scenarios will be cancelled itself if CL retreat back upside until break above the level of 95.02. That's all for today. See you online soon and good luck!